All right, we're ready to kick off. Everybody good? Welcome, everyone. For those of you who don't know me, I'm Phil Camp, Principal of Hire LLP, and this year's 2025 AI Honolulu President. Really excited about this panel. Before the fires, I've been talking to Karen about trying to pull something together like this on insurance, because before the fires in LA, it was already an issue for us locally. I think I see some development folks in the crowd. Actually, maybe we get a kind of cross sampling who's out there in the development side of and then any from jurisdictional authorities or some state is going to brand you here on the rest of our architects. So yeah, before the fires, even I reached out to Karen and we're talking about pulling an insurance panel together just because we saw that as being an issue, right? Something that we need to lean into and start understanding. And then obviously what happened, and they're kind of putting out fires in LA as we speak. And I just reached out to Karen and say, hey, maybe we can move this up a little bit because this is going to be a pressing issue for us. And so Karen was fortunate enough to pull a panel together here for us. So hopefully this is a good discussion. I want to keep this pretty informal. This is really, I think my guess is probably going to be the first of a lot of discussions on this topic in the next couple of years. So if you guys have questions, feel free to raise them. And then we'll hopefully have some Q&A at the end. So without further ado, let me do some intros. So Karen, well, first and foremost, this is the Atlas insurance team, if you guys don't know. So they're all with Atlas. They all represent different specialties within Atlas. So we'll start with Karen. Over 40 years of experience in the insurance industry. She specializes in professional liability coverage. Formerly VP of claims at Hammock and resident VP of Argonaut Insurance. So her field of expertise are A&E professional liability. So I'm sure a lot of the A&E folks out here know Karen quite well. And then training customers in risk mitigation. So she's great at that. So if you have a question about your contract or a term, Karen and Matt will usually be able to help you out. She's director of Hawaii Architectural Foundation and licensed in Hawaii, California, Illinois, and she also serves on the board for AI Honolulu. Welcome, Karen.
Thank you.
Elaine Panlilo, she has over 16 years in the insurance industry, 14 years with Atlas, so a long timer with Atlas. Fields of expertise, condo, residential, commercial, community, and homeowners insurance, condo association markets and market conditions. Delves in diverse insurance solutions and is experienced in licensed in property, casualty, life, and health insurance. She's also affiliated with the Moilui Resident Managers Association, member of Institute of Real Estate Management, and article contributor in Building Management Hawaii Magazine. So you probably see her articles and her contributions when you guys get those every month. So welcome to the panel. Matthew Terry, 10 years of experience in Hawaii's business and legal community. Former deputy prosecuting attorney with the City and County of Honolulu for 4 years. Former associate attorney, Bronzer Fujichaku Robbins for 4 years. Civil litigation, arbitration, and mediation of business disputes. So another great resource for those of you in the A&E industry. And affiliations with the Hawaii State Bar Association and U.S. District Court, State of Hawaii. And last but certainly not least, Dylan Nakano, 16 years of experience in the insurance industry, 7 years with Atlas. His field of expertise is construction and real estate, including developers, contractors, manufacturers, distributors, wholesale and retail, so pretty much everything, right? Got it all covered. Insurance placement and risk management consulting, managing risk through contractual risk transfer, and his professional affiliation to Commercial Real Estate Development Association, a NIOP member. And probably a few things that you have here. See something else? Is that good? Did that cover everything? Let's hope so. We're just ramping on here for a while. But anyway, I just want to welcome the panel and thank you guys for joining us. So before we get too deep into it, I kind of wanted to start. I think if you guys read the primer for this panel session, really the first thing we want to understand is the insurance industry and the market we have today. So mentioned briefly, I reached out to Karen before the LA fires. And I think one of the issues that we saw from the A&E industry was last year we lost one of the larger carriers in the state of Hawaii. I think that's more on the resi side, right? But still, shockwaves throughout the insurance industry, premiums rising up. If you can even get coverage, a lot of people are having to move to outside of standard market for policies. Who should I kick this to, Karen? I just trying to kind of a primer of where we stand, where we stood, maybe I should say, past tense, prior to the fires. It's just kind of.
Elaine has the insider information on the property market, which is the highest rate.
All right, so here in Hawaii, we have very extremely limited options for commercial property insurance in terms of admitted carriers. When I say admitted carriers, these are the carriers that are licensed and under the supervision of the Hawaii Insurance Division. They file their rates, and so their rates are regulated. They're also backed by the Hawaii Guarantee Fund. The counterpart for those, if we can't find placement in the standard market, we have the excess and surplus market, or that's what we call the open market rate. So that's these are, they get to have they're called insurers of last resort, but there is a place for them because they do take on risks that standard markets would not like to write. Their rates are not filed, so they tend to be a little bit more. And then you pay surplus lines tax on top of that, which is 4.68%. So in terms of condos, once these projects are built, right now there's only 3 admitted insurers in the state of Hawaii. One of them is not writing new business at all. So there only leaves, they can only write the 2 that are still writing. They're only going to write fire-resistant high-rise buildings. So your joint masonry.
That's project insurance you're talking about.
This is for once it's already built.
Okay, existing.
Existing. So, they're not going to touch joisted masonry or wood frame. So for those types of construction, they're out immediately in the excess and surplus market. And also once we're talking about super large buildings, like if we're talking anything above $100 million in replacement cost, most likely it's gonna end up in the excess and surplus market.
And would that have been the case 10 years ago?
10 years ago, we had a little bit more options. There are some writers. Dietrich at that time was still writing some, DB insurance. They're writing all types of construction at that time. So they were really in a growth spurt. Just after the Lahaina wildfires, that's when they started looking at the aggregation of their risks and realized that they have a lot of exposures, especially on the neighbor islands. And so also that's when they started non-renewing. We went through, last year was a painful year. All the wood frame and joisted masonry buildings that are insured with DB insurance are being non-renewed. We're going to the excess.
Sorry, is that for non-sprinkler existing or all across the board?
Across the board, as long as it's wood frame, joisted masonry, it's going out to the excess and surplus market. So we are seeing, 300% premium increases, 600% premium increases. And also because a few years ago as well, the rates were so low, it's already lower compared to other states in the mainland. So we are going through a rate correction and also going from an admitted market with filed rates to non-admitted or the excess and surplus lines. So that's how, last year was really painful for a lot of associations with up to 500% premium increases.
So that's primarily the condo market, writing existing structures. So didn't be the right person to speak to about project.
Like when you're building a project,
Yes.
the market's still, I think it's relatively stable. Property damage, like builder's risk. Construction type still, matters. We're starting to see more larger wood frame projects go up, like 5-story frame or concrete podium. Those projects are a lot more expensive to insure. Smaller wood frame projects, there's a lot more requirements. It's very similar to the condo market where we have a standard market and open market. But in project insurance, we have a lot bigger market or bigger standard market.
On say a podium project, it's a carrier, the insurers, are they looking at stick frame wood differently than stick frame metal not possible, even if like say if it's type 5, but it's not possible? Do they look at that differently if it's stick frame metal
A lot
versus
of them
stick frame
don't.
wood?
A lot of them will consider that all stick frame.
It's not gonna,
So even type 3A frame over podium with some fire, with some non-combustible components will be considered.
so it's all one big animal. So that's before the fire, right? So okay, well, part of what we want to talk about, and the reason we kind of pushed this session up a little earlier was really, obviously, we all know what's happening or happening in LA, massive devastation there. There's gonna be huge claims. I don't know if you guys heard, I was just talking to Karen about this before we walked in here. I think the State Farm on Tuesday or something made an announcement they're gonna be raising premiums 22%, and they're still putting out the fires. And this is in result to the claims they've already been rolling out over $1 billion, or it's a pretty big number, but it's just the tip of the spear, right, at this point. So we have that out there. Who wants to kind of try and tackle that discussion?
Well, I'll give you the round number. It's $100 billion in losses. So,
Projected from LA.
right, so that's pretty high, and they're saying no one is immune to any of these climate related claims, from flooding to fires, you know, it's worldwide too. So if we're talking about the whole scheme of global, we're talking about the reinsurance market. From that, they insure the insurers, and the insurers pass it down to your clients, to our clients. And so that is going to affect all the rates, not only of property, but the other lines of insurance too. We'll see that being dispersed throughout the insurance industry. So individuals, homeowners, even some of the auto insurance claims that we have in Hawaii, particularly, we have the worst drivers in the country. No, it's a statistic. We do have the worst drivers. Fact. So all of that's going to trickle down, and what's going to help is if the economy improves. Interest rates seem to be improving. So there might be, you know, some relief from that, but not instant. So everyone's going to be feeling it, but faster in the property sector.
I think that the frequency and the severity of global catastrophes is concerning. It's harder to predict. And the harder it is to predict, the more concerning it is with insurers. As insurers get more concerned, they want to take on less risk. So either they're pulling out of markets or they're restricting the amount that they're willing to write. Like Karen mentioned, they look to reinsure more. They're not going to take on, you know, all the risks that they write. They cede that off to other capital partners. But insurers are, after Lahaina, especially our local insurers, they're really concerned about their aggregation. So how much insurance do we have up in this zip code or this area?
Can you kind of just, because I know I asked you a question, we got several calls before this session, so can you kind of give the layman's term about aggregation and how
So
that really
within a
impacts?
specific area, how much risk does an insurer have? For not just commercial buildings, you know, homeowners, if they're writing builders risk on builders risk, how much exposure do they have to any given area? And insurers are.
When you say area, are you talking about geographic area or project type? Geographic.
Yeah, so anything within a close proximity, they're looking to scale back. And as they scale back, usually that insurance company was writing that insurance because they're against it. So that's another reason why insurance is getting expensive.
Sorry, can you say that last part again? I didn't quite catch.
Usually the reason why an insurer was insuring a building, home, or whatever it was, is because they were the most competitive. But as they scale back, that's also causing insurance costs. We have reinsurance, we have capacity issues, aggregation. So it's a bunch of things that are creating like a perfect storm.
So do you see that on the, because you're more on the builder's risk side, the construction side, dealing with our development partners, do you see what's happening in LA and kind of State Farm is more on a single family resi side, I'm assuming, more on residential? And what do you see that impacting your side of the equation on the insurance as much? I mean, you started the kind of lay of the land of where we are now, you're saying it's pretty stable from the risk side. You see that impacting that? I mean, because we're going to be dealing with construction material costs and upsurge and plywood, stick frame, and all that stuff, right? From the rebuilding, but on the insurance side, do you see that impact?
So I think on like builder's risk and project insurance, similar to what we're seeing on the commercial side right now, with standard markets that have always been the most competitive, they're starting to scale back. But in the open market, where pricing has been priced more reasonable, although more expensive, it was more reasonably priced in the past. Those insurance premiums haven't increased as quickly, but they have been increasing as well. And they've gotten to a point where there's other insurers that are becoming more interested in writing this. And in the open market, that pricing has stabilized, whether it's builder's risk or regular commercial risk. And the cost between the standard markets and the open market is starting to compress.
Yeah, how much is it gone up? I heard 300 to 600% on the stabilizer bill on the project.
On the project side, I haven't seen much increase. It really depends on if you can fit in a standard market, you're probably looking at 25% less premium. But in the open market, the underwriting is a little stricter. Requirements and conditions for construction is a little stricter. So if you're building stick frame and it's because of the project size, you fit with the open market and not with the standard market, you may also be required to have like 24/7 monitored surveillance. And that's another restriction. You know, it's another additive cost that's very expensive.
Okay. Thanks. Elaine, maybe on the condo, so you mentioned a little bit what the market was like before. And then if from that recently with about State Farm, do you see that impacting our local carriers and you're already limited to effectively two? What does that mean to that type of insurance, condo side or AOAOs and that be like coverage?
So there's two sides of that as well. We have the carriers that are writing commercial property, so they're writing the association as a whole, the building as a whole. And then you also have the personal line side. They're the ones writing the HO6 policies for the unit owners and even the single family residences. So State Farm here in Hawaii, they are mainly a personal lines carrier for homeowners, single family residences, and HO6. And they're a direct writer. They only write through their agents. So in terms of Hawaii, they haven't been a player for condos, for condo associations since really after NIMBY. So it's been decades. So they've only really grandfathered in, I would say probably less than 20 condo associations that they're still hanging on as a grandfathered accounts. So they're not writing any new condo association business at all. And
so not necessarily an impact to the development
yeah.
AOAOs, but the single family homes and individual condo owners.
They have to file rates before they have to do increases, before they can do increases. So I think that there is going to be some impact on the reinsurance layers. So how fast they can file and how fast that can get approved. That is the main thing. So we haven't heard of any rate increases in the near future. We've already had some rate increases from other carriers like Island Insurance, for example, or First Insurance Company of Hawaii. After the fire, we haven't heard of anything yet, but I don't see that being too far-fetched.
From the aggregation perspective, I mean, obviously that 22% request is specific to the LA fires in the state of California. Is that viable for them to pass that, suggest that 22% moves to their other markets? How would you see that getting moved up? Again, State Farm is primarily the single family, right? So is that something that you assume that?
On commercial property, so once something's built, 22% increase year over year. I think in this market, it's a pretty big deal.
And that was before the fires.
If, again, if you were already in the open market because of the type of risk or prior claims, we would anticipate a more stable renewal. But anything with a local standard market still somewhat underpriced compared to the rest of the market. So it's still catching up.
Maybe it shift a little bit. And again, if anybody has questions, then here's got the experts here. So if you have questions, feel free to ask. One of the other topics we talked about for this is also something that is near and dear to AIA's heart, building codes and the adoption of building codes and the lack thereof. So one of the questions we had is, recently the governor has put a moratorium on the code adoption, so we're still in 2018 IBC. If we're losing carriers, the premise for the restriction on code adoption is to, in theory, reduce construction costs, right? So we're implementing new criteria, impacts to the actual construction. On the other side of that coin, so that's day one costs, in theory, that you're saving by staying with the code. Will that impact our insurance industry if we're insuring or they're underwriting in a region that has adopted or is holding older codes versus, say, the West Coast if they're on more current IBC? Or I don't know if that goes, who wants to tackle that one first? Here,
I wouldn't advertise it,
you wouldn't advertise it.
not to the insurers.
Well, I mean, obviously the insurers know, right?
Not always.
I think that the insurers that are right here, right now, they're comfortable. I don't think that's gonna make any difference for them, but insurers that don't write in Hawaii right now, I mean, they're taking a lot of things into consideration. Most of them are probably most concerned with wind, also with wildfire hazard, but building code is something that they would be sure that they would think on as well. I don't know how much of an impact that has, but it's another like a checkbox of here's why we do it.
You see that? Do you see any existing carriers right now reconsidering their coverage in this market after the fires?
I'm sure that
I know we had a moratorium from a lot of insurers. We're not writing business in certain areas. So it does hurt, to tell people that you can't find anything. But, there's only so much money out there as far as capacity goes. And so when they're looking at a risk and they are aggregating, their risk in a certain area, they're going to pick the cream of the crop. And they're going to drop the buildings for clients that have losses or are at higher risk. Until they can grow that money through interest rates or the stock market or something, as the market goes through this cycle every so many years. I've been through several insurance cycles, a hard market. We're in a very hard market right now, in a soft market. We have to just kind of stay the course and try to stay stable and keep insurance in place despite some of the higher costs.
You guys talked about not renewing stick frame over podium construction. Are there any other things there that might just pop up on us, like buildings that don't have impact rated glazing, but they're all concrete? Is that going to become an issue in the near future as well with insurance?
Well, okay. Karen wants you
Yeah, we have
So, there's gonna be claims that happen, and if they start to happen for a common,
Well, then we'll have to have a big hurricane for that one to really happen, but.
but if there's a common theme of something that starts to occur,
Okay.
then there's gonna be an issue ensuring that type of thing
So we're good for now.
for now.
Okay.
So what Karen wants me to talk about is, it's really for the existing buildings, aging components, plumbing in particular. So, we've had, coming from a soft market before 2019, that's when, those were the golden days where we can, we can actually go in front of an association and tell them, DB insurance can write your premiums 20% less than what you currently have. And our deductibles back then were low, like $5,000. But what happened is that with deductibles being that low, a lot of claims are being filed. A lot of building managers or building management, they're kind of deferring maintenance. And so they're like thinking, oh yeah, our pipes are old, it needs to be replaced, but insurance is gonna pick it up after $5,000. So as a result, deductibles started creeping up, premiums started creeping up. Now the new normal is $25,000 deductibles. Some even have 50,000, 100,000, 250,000. So what we tell for our condo associations for existing clients is that be proactive, have some loss control measures. Some of the loss control measures we recommended are high-risk components inspections, especially for those associations that have, the water heaters, the 50-gallon water heaters in their units. Those need to be replaced every 5 or 10 years. So, because if that leaks, it really cascades down 20 floors, and now you're looking at a $500,000 claim from that failed water heater hose. So that's one of the things that we try to push, and it really, for good measure, it should be done every 3 to 5 years. It's already in the statute that the board, 514B, section 138, that the board has authority to do these high-risk components inspections inside each and every unit. It's just not being followed.
But does that help premiums? Is there a way to,
It does.
how do you rationalize that, or how do you put some skin behind it? Because people say, yeah, we're gonna do that, they're not doing it.
It's like an unknown cost savings, because you're preventing your insurance premiums, and you're preventing possibly uninsured losses within deductibles from having to be paid.
It's very simple, design engineering too, right? You say our report, they're saying,
Water sensors.
water stops. So if you have water leak, it shuts off.
That'd be great if they had one upstairs, huh, Julie? We had a leak here, that leaked into our office, a while back.
But I'm guessing it's implemented like that. So. That's something.
Well, that's two questions, though, right? Is it, so the pay for itself understood because it prevents things, does it actually impact premiums?
It has helped me negotiate with a carrier to stay on it. And then also in terms of premiums, then we do it twofold. We can increase the deductible, but then also with them having a high-risk components inspection, we've kind of negotiated the premiums down a little bit. So,
Reed, did you have a question?
I have a question. So, from a new bill perspective, how will we be able to help reduce some of the premium? Could we write into like the CCNR that, the board has authority to do these inspections? Or would it be better to make these high-risk component limited comment element? So that way it forces the association to then replace it every 5 years. Do you see having something like that in place while the developers drafting these governance documents would help reduce the insurance post construction.
That could possibly help. The only thing I worry about, because I advocate for our boards and condo association clients, is that if they don't follow their own governing documents, then that exposes them to
That's where
DNO.
DNO comes in.
Yep. Exactly. That's where it exposes them to DNO lawsuits. So, you know, I tell them that, yeah, if you're gonna have it written in your governing documents, make sure you follow that. So, but it might help.
Thank you guys for being here, and thank you for being on this symposium. I think it begs the further question of how, is there a mechanism for insurers to be involved in the design process? Or is that?
Well, that
Is
was
that,
kind of the question. So we talked, so the commercial industrial, there's FM global standard, right?
Right.
So is there a corollary? Do you see that happening?
FM Global specifically, it actually caused a project that I was working on to basically stop. We totally changed the design, and the owner decided to self-insure. Because the FM Global standards were so restrictive that, of course, they were building a bomb shelter that never would have had to pay anything, right? It was cost prohibitive for the developer to build. So the developer took on that risk themselves, because the design components were not feasible. But that was.
So
an
what's your
example.
question though? Is your
Well,
question is there?
so, yeah, is there a place for insurers to talk to designers? Like, is it common for the design industry to reach out to insurers, or vice versa, insurers to engage in the design process, to help get building built?
Not that I know of directly. They sit on several committees together, like for contracts and things like that, but I don't think that they get directly involved in design. That's not their expertise. But through their agents, we usually, when someone calls and says, has a question about a design on a building, or someone wants an exception, or they're going, making some kind of questionable move on the design, we usually get the insurer involved. Their claims department people are all attorneys, and they can advise the client to go back to the owner or the developer and make suggestions, but directly involved in the design, probably. They do have suggestions though, like in the documents that we're talking about. I've seen some really unique and creative wording in the sales documents, actually. One affordable unit said, you know, $10,000 of your payment is going to go into an escrow account. And in this account, we're going to hold the money to pay any claims that you have. But after 10 years, if you don't have any claims, we'll give it back to you with interest. There were very few claims on that bill. So, and also that same person was very creative. I know this attorney is smart. It also said that concrete cracks, it doesn't necessarily mean the building is going to collapse where you have to file a claim. You know, so there was some very unique wording that can go into documents ahead of time to warn your people that are buying things that, you know, you don't have to file a claim for everything.
So is that a sales contract?
It was. I have a sample of it.
There's also parts of that talk about, if you're not satisfied with.
We'll buy it back, right?
We'll buy it back from you.
Yeah.
Thank you. I'll take it right back.
We'll buy it back from you, no problem. So there's always advice that you can get, or some people can get real creative.
I can ask which condo or.
Can I get a copy of that?
It's right across from Olive Park.
Oh, the affordable
Yeah,
condo.
It's all the same.
so I was real impressed.
I don't know, you have more agenda you need to get through tonight.
No,
I'm
just gonna say-
afraid I'm gonna possibly derail this for a second.
As long as it's on insurance.
It's on track. So, I'm a Luddite when it comes to this in general, but I think that, I'm thinking of like USAA, I've been a USAA member forever, started with car insurance, it was thirties, I think, military officers who felt, hey, our risk is very low here. Like, we know what we're doing, and then they kind of formed their own group, and then grew into something, but, if insurers are removing or no longer insuring entire areas, looking at markets, looking at regions, like, what are the options? Like, are we gonna go back to basically self-insuring and figuring it out ourselves by me aligning myself with friends of mine who I know have houses that they're built well or they maintain well, and then just kind of form a movie of our own and say, I got you, you got me. Is it gonna be ground up? Are we gonna start over? From how the insurance industry
That's an
first
aggregate.
began?
So if things get worse in certain areas, it could come to that. They're called risk retention groups, where you're self-insuring within a homogeneous group. Some other specific industries with specific types of insurance have gone through that have gotten out of it. But that could happen. Go ahead.
I know Karen and I talked about this, but there's a lot of risk for architects to work on condo buildings, working for the association. And that amount of insurance is going down too. Are there any other building types or anything that is coming up that's also gonna be uninsurable? As a
You're talking about the
professional,
A&E professional insurance.
yes, professional insurance.
Yeah.
Yeah, so anything residential is becoming more and more risky. Right now, as you said, condos is very risky, right? A lot of insurance carriers have a limit on the amount of condos that you guys can work on for billing. The major insurer that we work with has a 25% cap. So anything above 25% of your billings, they're gonna kick you out.
I have a question about this 25%.
Yeah.
Because I was just having this conversation. So if I do this large high rise, if I could put that money that they owe me into an escrow account that I haven't taken from, can I just, to get that 25%, can I, instead of spreading it out over 3, maybe spread it out over like 5 years?
No one's ever asked that.
Yeah, well, ever
Well,
since I
but
talked to
it's
Karen, I've been
interesting-
thinking about, how am I gonna, I don't wanna do a project like that uninsured.
Yeah, the more you can spread out your billings and your payments
Yeah.
for the projects, the better it's gonna be. So they're looking at it each year, right?
Yeah.
Right? So if you can spread it out and keep your percentage below.
Yeah, so as long as they don't pay me, then.
A certain amount of time.
I'll hire you in.
Yeah.
For a certain period of time, you gotta pay me eventually.
It was an interesting idea. Yeah, I mean, no one's ever asked us about that. I mean, we've had people get like, certain amount of their billables put into an escrow account for.
Or have your owner pay the subs
Yeah.
directly.
Yeah.
Yeah.
Sort of
Yeah.
different.
Because
Oh,
your premium is based on gross. Gross. So if it never comes to you, then it's not under you, it goes directly, the contract from the owner directly with the geotech, directly with the civil, directly with the structure. To reduce your.
That helps a bit, but if you're a small office like me.
Yeah.
Doing one high rise can really kind of bang you up,
Yeah.
you know? And, yeah, so I'm trying to be creative. How can I still ensure I get my money? Yeah, if it goes in an escrow account, is it considered received or?
Yeah, I'm guessing it would just depend on when you receive that.
Yeah, when I
It
draw,
still went to you though.
but to the, well, I guess.
It would have to go to someone else too.
Yeah.
But yeah, residential townhomes, anything above 15 stories, there's gonna be a debit on your sort of your insurance premium.
that's for just the association, not necessarily working for the unit owner, or is that 25% also if you did?
That would just be for the associate, you're working for the association. Unit owner would need something.
It's more like. a
Some
custom-
insurances counted the same, I remember we talked about this, like
Some do.
switch insurances.
Most people do not. Most insurers look at it, like if you're doing just an interior of, it's like doing some custom home.
Yeah,
So
so there's no other building type right now, other than residential, right, as of now? that
I
you're seeing?
mean, there are different types that you get into debits on your premium. Anything over that has to do with water, bridges,
something like that, anything that there's a large amount of people going into the area, like a mall, shopping center, sports arena, school, those type of things would get.
But generally, retail is a credit area.
Generally retail.
I have a question. So if there's a cap at 25% to insurance carriers, and you go 24,
You can't have two insurance carriers.
Not for your
Yeah.
question.
Yeah.
What about when there's a project, owner provided project insurance? So like if I have my
They don't
client,
tell you they have.
well, if I tell them I can't take this on unless you do this. How does that mechanism sort of function, in relationship to my own E&O insurance?
To your fees, I mean, could you then say these fees aren't counted on your own personal professional
Yeah.
liability?
Yeah,
policy,
exactly.
It should just be on this project.
Owners are typically buying like coverage access to the A&Es, but it's only for their benefit. So it doesn't actually protect the A&E.
Okay.
Are there wrap policies that include any?
That's a great question.
Not right now. That market dried up several years ago.
Candy, that used to be, right?
Yeah, we used to sell for
Yeah.
$30,000.
But now it's gone.
It's gone.
Okay.
Because the losses are so high. The last one we quoted was in the hundreds of thousands of dollars. And it was a very, it was hybrid. It was hotel and cottage. So there was only a portion of that, but it was really expensive with high deductibles. Project policies could come back if they can make money off of it. But right now, no one's making money from it. Yeah, Reed?
Do you see any industry right now that architects and engineers sign contracts with increasing the limits of that is necessary for us to get work with them? Like, a lot of us state where see county, do you see them increasing those?
A lot,
Okay,
a lot of ask.
so then if we want to do that type of work, our premiums just gonna go up because we need to be insured for them.
Well, just because you want it doesn't mean you're going to qualify. So I
Yeah,
would
you
like,
guys wouldn't qualify me. It helped me get out of habit. So it's great.
we probably wouldn't give you $5 million. You have to be a larger firm.
Yeah.
And a lot of times they're asking for high limits on small projects. So if that happens, on average, a claim in Hawaii is less than 300,000. In fact, it's almost 200,000, the average size claim. There are the exceptions. There's the $5 million claims. There, some big projects that have big claims. But on average, it's not even $1 million, and they're asking for $5 million. On the mainland, they're asking for 10.
So speaking from like the owner perspective, the cost of everything is increasing. So the cost, if there is a claim, it's probably going to be more expensive. The probability of it being at a higher level is a higher probability. So I think that it will become more common for owners to require higher
It just sounds like it's getting more difficult for smaller firms to survive because we'll be priced out of even trying to get larger projects because we cannot. It doesn't make sense for us to afford carry that much insurance.
There's a tool called the Specific Project Excess, or SJX, or Specific Job Excess, that for that particular project, you can buy higher limits and charge the client for that. But they only allow that a couple times on a policy
A lot of them don't allow it on any residential type.
and not on residential. So sometimes, talk to your agent about what kind of project you're doing and if something like that is available. You can also buy excess over your policy at another carrier, kind of like an umbrella over the profession. If your insurer won't allow you to have the higher.
Karen, you mentioned, that was a sales contract example where that helped reduce claims. So obviously we're here at AIA, a lot of design professionals in the room. What can we do as design professionals to help our development, our client partners potentially offset risk of design? Talk about water sensors, talk about possible construction. Are there things that we can engage specifically on new projects or retrofits and help that effort, try to knock down premiums or even
For sure, contract reviews,
that's more on our coast, right?
right?
So I think, so for condos, there's a lot of, same thing with condos. Just the way that they're run, but, water is a big issue. And water, there's so many penetrations in the building, if there was a way to put in some type of flashing to prevent that from happening. That would be a design component that would make insurance.
That's certainly something that's viable. If you give MA and ECO or something, it's night and day, right? As far as the waterproofing approach. How could we engage with the carriers up front so that our client partners can see that benefit before it's implemented, right? Like ECO is $2 a square foot and GMA is probably $12 a square foot. So to go with that, how do they see that premium?
Insurance companies don't like to give like set discounts. So it's something that may open up more markets to be willing to consider that type of building to insure, but it would help stabilize their insurance premiums in the future. I think for a developer, when you're talking like for sale, it's harder to justify because they're building something, they're selling it, they have to sell it at a certain number, and it's whether or not that consumer sees that benefit,
Which is why condos are helpful.
Yeah.
Yes, a lot of the discussion has been around the condo market, but I want to walk away with a clear understanding. It started with a wood construction kind of focus. If we're in the commercial market, let's say retail, let's say just office, and we're leaning toward wood construction. Are we seeing that kind of heights in that kind of category of market, like 300, 400% heights kind of things? Or is it reserved for the more residential condo?
There are more standard market insurers in the regular commercial on condo, non-habitation. But when you hit a certain level of exposure, like 20 million of replacement costs, those buildings are gonna run into an issue with having the local standard insurers are not gonna have enough capacity to write something like that, so it ends up in the and the difference in premiums is compressing. Where we're seeing the big increases is when there's claims. So just because it's frame doesn't mean that it's gonna be really expensive. It's gonna be expensive, but it's not gonna be a 300%.
Can I ask another question?
Yeah, I wasn't even sure if that your issue, because you were asking if the material that you would sometimes see in a typical residential construction, if you're utilizing stick frame wood in a commercial project, does that impact? Is that what you're asking?
It's kind of like that because if we're doing like, I'm just gonna pull it up, a strip mall. They're gonna frame that thing with stick construction because there's only one, maybe 2 stories. Are they seeing, as they go through their performance, are they anticipating that kind of rate increases in insurance?
That you might see in the resi.
Yeah. Not really.
I don't know if commercial building owners are having enough discussion with their insurance agents on it. I think that habitational where they're holding on to that risk, like an apartment, they're probably more interested in how's this gonna impact me if I build frame over podium versus something non-combustible. But it will make an impact. It'll definitely be a premium impact if you're building with frame or better than frame. Some other types of construction that could be problematic both for in the development cycle and post-development would be the mass timber or like the type of timber that's gonna be more difficult to obtain and still be considered framed. They get hit harder by a higher premium and
And
premiums
because
can
of the
escalate.
replacement cost is this seen as,
I think that the insurers that are underwriting those appropriately are considering the time delay of being able to replace them.
So when you say framed, you're talking about load bearing framed or even buildings that are infill framed?
Any type 5 or even non-combustible where it's frame over podium.
Non-combustible frame over podium, so even like a type 2. Metal stud.
Metal studs are fine.
Metal stud's fine.
yeah.
So just wood, whether regardless if it's fire retardant treated.
So now I'm jumping to more the residential apartment, more apartment project. In all of this affordable housing push, people are being capped on rent, like Bill 7 projects or purchase, right? But let's stick to the rent one. I want to understand whether or not this has killed any projects. Because once they figure in the rate increases in ensuring a Bill 7 apartment building, that they're capped based on income, that they can't make it work. Have you seen it happen already where projects have, I said, we gotta walk because it's not gonna be, we can't make this work within 10 years, but
Personally, I haven't seen it, but from what I understand, most of the Bill 7 projects, they still have some room before they hit a ceiling on what they charge for rents. But I'm not sure if they'd be able to fill out the occupancy at the high end of the rent.
I can say that I've had one client now switch to metal stud.
they switch it.
Yeah, I got a bunch that are wood over podium, Bill 7 projects under construction. I'm a little nervous, they're not gonna get insurance when they're completed. But yeah, I had one, and we made that decision before we really got too far into the process. But his concern was insurance after the fires.
Could see.
I think we
Thank
could,
you.
there could be more issues on some of the light tech projects going on because they're larger and some of them are really big frame. The cost difference could be significant.
I have a question regarding NFPA and all those certifications. When you do a building, you look at the assembly, versus, it's a component. So if it's allowed by NFPA and, they have a manual or whatever that says use this for so many hours rating, that, why wouldn't the wood frame structure, if it follows all the NFPA requirements, why shouldn't that be accepted? As similar to the others.
They have a choice.
Yeah, but you have assemblies that are approved nationally, they're equal. They give you the same fire rating, they give you, an assembly, if you have to use extra boards on fire, whatever, but you have the approved assembly. So why would that, be more expensive? I mean, it's.
Same risk as a
I think NFPA is for save the life, not save the building, so the building still will burn down eventually after
Well-
2 hours.
Well, NFPA has all of that for so many times. They give you the complete assemblies for just about every type of component you can use. So,
Oh, you also see a lot of metal stud buildings going up with metal joists, right? And your fire separation, there is no tested UL way to do that. And so it's a lot of architects are just doing it, hoping it'll be okay. And follow it like the way wood works. Wood is a fire block, metal's a heat sink. I even had a fire marshal on a project come and inspect, and he's like, yeah, I feel better about these wood projects because I don't have to worry about being in the fire and the whole building just collapsing from heat. So yeah, I find it kind of odd too that you guys would be not insuring wood. I worry more about metal stud buildings myself.
Question, before the seminar, we reached out to the new CCA, the insurance commissioner, try to get the policy folks to the table, and maybe we can have another session later on with them. But from that side, do you see, I think Karen, you and I talked about there was a policy in effect in California where the state of California was helping underwrite in troubled areas that maybe wouldn't be covered, and they're bridging that gap in coverage. I know the governor has been talking a lot about, because it's one of his issues, right, is insurance. Do you see policy on government, state stepping in and helping bridge that gap or helping?
They're talking about it more and more. But I think the insurance commissioner was saying it's not going to be much cheaper if the state funds it. I mean, we did have the hurricane relief fund for a while. We have insurers now that are doing hurricane. It's kind of a stopgap measure. But if they're looking for premium relief, he didn't think that he could do it for cheaper than what the market is.
I think the California policy was just to provide coverage in areas that wouldn't
That
be.
people were just pulling out of insurers and just
Right.
totally going by zip codes and saying, we're out of here.
So you see that.
Hopefully we don't have that situation.
Yeah, hopefully we don't.
Yeah, let's hope, because in California, they're gonna have the issue, because states gonna be getting hammered in with policies that burn, right? Because that now they're gonna have to pay out.
Yes.
We only got like 4 more minutes or 3 more minutes, so we're just about wrapping up here. A couple more questions.
I wanted to get on the legislative cooperation. I assume that the insurance industry has advocates or lobbyists or everything to there's definitely more engagement on that because that affects costs. So last week we had our AIA advocacy day. Several of us went and talked with various senators or reps and then some staffers. And the aftermath of the Lahaina fires and the LA fires came up. Well-intentioned staffer was like, how can we do something to make our community safer for people, whether that's different materials. So the lessons learned from Lahaina fires, we can then incorporate it in a way. My take on that was, it's going to Hawaii's so small that it's not a market driver, but the fires in California possibly are similar to emission standards for cars, right? There's just so much volume there that it could be hard to ship. But I caution this person on regulating, we try to make buildings fireproof or relating to that. That's just going to drive costs up. That's going to drive more people to the mainland, which is then counterintuitive to them wanting to keep people here and make it affordable and to protect those of us that are in Hawaii. It could have the opposite effect. So there's a balance there, right, between what's insurable and what's buildable and whatnot. So I think all of us in this room have an obligation to work together so that these well-intentioned legislators don't over-legislate and then has the opposite effect.
Any other last questions? I think we're be wrapping it up. No?
Are there any just obvious takeaways like, okay, I'm on a building or I'm building a condo, insurers will recognize X, Y, and Z. The water shut off, automatic K. Are there any other things that you've seen, like people put together their argument to present to an insurer, and they're like, okay, this one worked, this one worked, this one didn't work, this one usually works.
Well, on that same question, when should they start that discussion? Can we come in with schematic designs or something with our client partners do and say, this project is all not possible versus will that help? Is that?
Yes.
Yes, so sooner than later?
So,
or-
yeah, sooner than later, before you get to cities. I think that there's a discussion to have on the development side and the insurance specific to that. I think on the development side, we can get a little more creative on how we do the insurance. depending on whether it's one building, multiple buildings, if it's single family homes. And there's a checklist, like Elaine probably has a checklist, or she has a checklist for best practices. And it's not gonna mean you get a discount, but it's gonna mean that, like Karen's mentioning, the insurers are looking for better risks, right? So if it seems like if the insurer can feel like the culture of this owner or this builder is, that they want to keep something protected and they want to keep it safe, I think that's going to make a difference on whether or not there's more competition in the market.
But to Jeremy's point, the items for material or construction type, so we just want to go water sensors.
Water sensors, like
Sprinklers, non-combustible.
Sacrificial anodes. Like rebar.
Awesome.
What else?
Does that help
Yeah,
answer?
it's so, insurance has gone up so much, especially if you're a property owner, and it's just the bill. It's not like 3, 4x, it's just unexpected. If you're trying to price a condo building, a 201H project, you have to put insurance into your maintenance fee cost. So that lowers your maximum sale price for your unit. So some projects that could work, don't work because that's what your maximum sale price. It's not like it trickles everywhere.
I think that communication with your insurance agent early on, because it's happening so early on as the project progressed, that keep a good line of communication as things change. It's best practice.
Well, hey guys, we're backing up on the 1 o'clock hour, so I just want to hopefully you guys put your hands together with me. And thank you all for coming. We'll